Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live throughout the day from the Singapore Fintech Festival. And joining me for this segment, we have Peter DeMeo. He's a digital asset lead over at IBM. We're going to take a look at IBM Secure Wallet Solutions. Peter, it's great to have you with us at the Fintech Festival. There's a lot of trends going on right now in digital asset custody.
Yep.
Give us some background behind that.
Sure. Digital asset custody, of course, is doing two major things. One is that it's protecting the key, and secondly, making sure that the use of the key is only done when it should be, right?
Right.
Because if you have the key, you have the asset. And if you have a copy of the key, well, every one of those copies becomes an attack vector, right? So it's really important to kind of look after it, but also to permission its use in a way that no one else can do so in a way that they shouldn't be. And today, we are seeing a need to have digital assets available online in order to do things like staking rewards and lending and collateral and things of that nature. And the reason for that, I think fundamentally, is that if you are an investor, high net worth individual, a fund, you don't want to simply park your funds and have to pay some basis points in order to do so, right? You kind of expect things like a bank. Like if I put money in a bank, I want interest, right? So that, I think, is kind of where the market is headed with respect to assets under management. They need to be monetized, okay? And monetized safely. Right. So safely means that you can bring them and use them online for things like staking, as I mentioned earlier, or lending, okay? But the human element, the insiders, the administrators, the operators, all the approvers, the fund managers, you have to assume that they're all evil. Okay, and you have to have a way to make them behave themselves whether they like it or not.
Right, and it doesn't extend just to traditional asset classes. You're talking now crypto and security tokens and utility tokens where that type of custodialship really needs to be,
absolutely.
There has to be a process in place for that.
Absolutely. There was, you think back, way back in the 1920s and 30s, you would evaluate a bank by how big its vault was, right? Until, of course, accounts became insured, and then it wasn't such a big deal. It's similar today, right? I mean, we're so early that custody is like the big deal, but honestly, custody shouldn't be anything you think about. It's just you want to do transactions, the key's managed for you, you don't want to have to worry about it, right? And we are so early that is such a big deal that institutional funds and mainstream investors and mainstream payments, et cetera, are just barely getting into this because there's no trust, okay? There's no serious infrastructure. I mean, the big four custodians out there, okay, handling trillions of dollars in assets, are only beginning to get into this space,
right,
and coming up with solutions, right? So we're very much early days, and because so, you have a proliferation of like all these different companies offering custody. And quite frankly, it's a lot of choice, but there's also a lot of risk in the way that they do things.
Right, I think part of it too is that there's this expectation that digital asset market is going to just plug and play with traditional equity market and bond market infrastructure. And it doesn't work like that. It's going to take some time to develop, and it's not only just from protecting against malicious activity, but also to make sure that those assets are available online and in demand when you need to access them.
That's right, absolutely. And I think that's kind of a warm wallet concept, right? Well, we really think of it in terms of temperature agnostic. I mean, cold storage is kind of how things were, and the issue there is that it takes a long time to do a transaction because generally you have a human involved, and that human can memorize a portion of a key, and guess what? Later on decide they want to do something with that, right? Of course, hot wallets are just with all those exchanges, and we've seen hack after hack after hack, so that's not really a great solution either, right? So you need the ability to kind of blend these two together and have these digital assets stored in a way that can be retrieved very securely in a permissioned fashion, but only when they're needed, okay? And in IBM, we have some technology that we've built around that particular problem, domain.
So this is what's called the HyperProtect digital asset platform?
That's correct, right. Yeah. So there's really two pieces to this. There's sort of this idea of protected memory. It's kind of like a box, if you will, and you just deploy your wallet applications into it, and everything gets encrypted. You don't have to worry about it. And there's no like command line, there's no little terminal session, you can't access it. It has to be done through what's called permissioned REST API. It's a whitelisted thing as well. And then we have a hardware security module, part of it as well. Now, you might have used a hardware security module recently. Have you taken money out of an ATM?
Of course.
Well, the PIN code that you typed in, that's an HSM, okay? And we manage what's called a master key inside of one of those, which is it's done in a way where basically it's tamper-proof in like all kinds of different attack vectors, and it's certified to the highest level. And so we use that master key to then encrypt all of the wallets and all of the private keys and everything like that, so that basically if you have an encrypted private key, there's nothing you could do with it because it's encrypted, right? The only way you can get it unencrypted is, in fact, if you go the proper path and ask the HSM to decrypt it, and the only time that would ever happen is when you're doing a signing of a transaction. Okay, so these two technologies kind of come together to provide a platform in which anybody that has token issuance, they want to do custody, they want to have non-fungible assets like digital wills, for example.
Oh, interesting.
Yeah, or specific blocks of gold. A lot of these or real estate or artwork or whatever. These are all kinds of assets that have to be managed very carefully, because if once they're gone, they're gone. It's blockchain. Yeah. So our HyperProtect platform is specifically designed on the IBM cloud as well as on-premise to allow others deploying their applications safely and securely, so that they can then bring on an on-demand capability to their solutions in a way that's trusted.
All right, Peter, thanks so much for joining us at the Fintech Festival.
Thank you very much.
And thank you for joining me on Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.